I got a caller. We got Dan in Atlanta. Dan, how are you?
Hey, doing well, Basil. Speaking about the VIX, that's what I was calling about, the TVIX. I mean, it's, not barely down today.
Yeah, so now there are a couple of things. This brings me to a couple of points that I want you to make. Because I have sell modes, so let me just say, for the Chapman wave methodology, I go from a sell signal, and usually I go stage by stage in templates. That is the 120-minute chart, then the daily, then the weekly, then the monthly. When I get those, it doesn't always have to be peak D. There were just tons of Ds. Here's a peak E in the TVIX, but mostly there were Ds that were in just all over the show. The semis, the Qs, the Dow, the S&P was, I think it was F, and then the last one was a D. When I get that, then what I like to say is, if the weekly chart goes from a sell signal, so it gets upgraded, and this is not a projection. It is like when some people say a 20% pullback is more than a correction in the market. So they've got these definitions. For me, the definition of something deeper than just a sell signal is a sell mode. It usually implies that you're going to go down pretty steeply, and if it's going up, it means that at least a minimum, you're going to get a peak D. So in that case, it's a projection, but on the downside, it's more an explanation of where you are. So here we go. We've got the TVIX trading at $10.20. The day is young, as we know. I can assure you, if there, oops, I'm going to sneeze again. Oh, nope, didn't sneeze. If the Dow has a sudden spurt of 200 points, this VIX, the TVIX and the VIX are going to pull back pretty sharply. But so far, especially if you look at the monthly chart, if you don't mind, I'm just going to go to the VIX index, because most people would be looking at something like the VIX to give them a sense of what's going on. It is held close to or above the 9-period exponential moving average and over the 200 period consistently since the breakout on the week of the 2nd of February. That is really unusual. I'm going to show something very interesting. Can you hold on, Dan?
Love to, sure.
Okay, good. We'll be back with Dan in Atlanta. We're talking about the volatility index trading just down a little bit when you think about what the Dow is. I'll be right back.
Hi, folks.
Hi, folks. We're back with Dan in Atlanta. And what we're really looking at here is a very long-term, I shouldn't say very long-term. Let me make it very long-term. There we go. A very long-term look at the volatility index weekly chart. And what you can see is that there was a cluster of higher highs above this orange line right here in the 200-period exponential moving average back in the period going to late 2014 to 15. That's where the market pulled back as well. Remember that August 15 pullback. So what we've got here is the August of 2015 pullback from right here with a China plunge at 53.29 in leg D, peak D made on the week of August the 28th of 2015. Huge move to the upside, and then it pulled back, and then again over that period of in December going to January, China and global fears, Fed rate fears, all sorts of things, back into the week of the 22nd of January, and that's where we had that big pullback in the Dow and the S&P. So holding here is saying to me that the intermediate term sell mode that I've got in most of the indices, key indices, is really being confirmed by the volatility index holding pretty high. I think that's what you wanted to mention, is that the VIX is actually historically in a higher range than normal, but it has been there before. But when it has been in this range, usually the market is pretty volatile. That's kind of what you're looking at, right?
Yeah, no, exactly. No, I know that, listen, there's maybe some news-driven events with Syria announcements coming up, I believe, by tomorrow or some nonsense like that. I did want to see what your thoughts were about an entry point. Usually what I do on the TVIX is just put in a limit order and leave it in there until it gets filled. I was thinking about 930s.
So what you would like is for this particular rally, if we can see some kind of spike to the upside in the indices, the stock indices, then the VIX should pull back. And if it pull back, you're thinking, well, if that's the case, the next big pullback in the market should see the volatility index spike. What I'm going to say to you is, if there is a move in the Dow, it's at 24,343. The S&P is at 2648. If there is a move of about 200 to 250 points in the Dow on the upside, there's a chance that we could actually hold a little longer. So I'm not inclined to do the. I know that it's also very easy to miss, as we did this morning, a perfect entry by 1 penny. But I'm prepared. The market offers you enough opportunity that you can grumble and mumble and say, oh well. But I would rather say to you, if you are around. If you're not around, you don't have much choice. But if you're around, if the VIX pulls back underneath the low that was made on, what was that? On the 5th, and that low was 920, there's a chance it could hang around that area for a few days, because if the market actually holds a 250-point rally from here, in other words, if the Dow gets to 24,700s and the S&P goes to 2710, maybe 2715, that could bring in more buying. So I don't want to just give you a number because it's such a volatile instrument. What I would rather say is, yeah, keep your eye on under the 930s. If we can go to the 910 area, that's where you want to be watching it. But to put in a price, you might.
I do understand.
You might want to put a price in mentally and then say, where would my stop be? And then suddenly say, you know what? I'm going to put a price in at my stop. In other words, give yourself the maximum leeway to be wrong, because that's kind of, sometimes that happens to me. I know subscribers often joke about it. Sometimes the stop I put in is actually the entry point or the exit point. So if you do the homework and you're looking at maybe 930, then you might want to say, you know what? I would want to stop. I don't know what kind of stop you would use. I wouldn't use more than a 30-cent stop on a VIX TVIX. Probably I'd make mine much, much less than that. But I'm just saying, think about it that way. So that's if you aren't around and you just want to put in a bid. My thinking is, hold off, have a little patience. I think we got a couple of days. I hope we have a couple of days. I want to see a bit more of a rally. I want to reinstitute my Dow short position. So I'm kind of in your camp looking for a short position. And I would be using the VIX TVIX kind of as a clue, and the VIX. VIX holding right now, it's even less. It's down only 18 cents. I hope we do get a bounce in the market, but this VIX is saying, you know what? A lot of people are kind of afraid, and they're buying insurance. So I'm just saying to you, I'm not sure I would put in a fixed price, because you could be in and out within 30 seconds. I don't have to tell you that. You know, right?
Yeah. No, usually, generally what I do, I'd put in a half order at first entry, and then usually where I would consider a stop, I'll make a determination if I want to pick up or step out and let the stop get taken out. So.
Oh, okay, perfect. I'm with you there. That's good. I just want. I think anybody who knows about these volatile instruments knows that you could put a bid in. The bid could be hit, and your stop could be hit almost like in the same move, because they move so quickly. You know that, so I don't have to tell you. Hey, thanks for calling, Dan. Good question.
All right. Take care, sir.
You too. So, folks, a couple of questions came in.